If you're a buyer on the sidelines waiting for an opportunity to buy in Cape Coral, you might want to start getting ready because your time might be here sooner than you think. Let's get into it. Hey, my name is Rick Harrison with MVP Realty here in Southwest Florida, and today we're zeroing in on Cape Coral, which may have some buying opportunities coming up. And I'll go into the data and a few stories about why I think that. But first, let's start off with our local market stats to give you a clear picture of where things stand this week. So for Lee County this week, this is as of yesterday, 2/19. We had new listings. We're actually down to 845. That's down 3.4%. Again, the big concern here is that a lot of people don't want to list their home or sell their home because that means trading in a rate of 3% for something that's closer to 6 or 7%. That's taking away a lot of their buying power, and it's also going to mean transferring probably to a home that's not as big, probably not as nice as what they already have for a higher payment. Solds is an indication of what was going on 30 to 45 days ago when people actually put their offers in and went under contract with a home. It's a lagging indicator, but this shows you that when rates really took a little bit of a dive from that 8% high and it came back down to 6.5%, we see a lot of people entering the market and putting offers in on homes. That is what drives the amount of solds up. So that's up 9.2% to 272 in Lee County week over week. Pendings, this is a leading indicator of what's going on in the market right now. These are homes that are going under contract as of the last 7 days. That's down 4%, 570. Again, we saw mortgage interest rates go up over the last 2 weeks. That's more of a leading indicator as to what's going on right now and why this pending number is down. Median sales price, on the other hand, this is one of the surprising stats to see because of the recent trends have really been a slow market. Prices have slowly been coming down a little bit. Median sales price is up though, and this is what is actually being sold at. So median listing price, which is the next stat on the bottom middle, that is an indication of where people are actually listing their homes at. So you can see that's at 415,000. That's actually down 7.6% from the week before. But again, median sales price is what people are actually paying for right now, what homes are selling for. So for that to be going up 1.1% week over week, the indication is that it's still moving up. So prices are still rising in this area in Lee County. Days on market, this is also another indicator. 38 days on market. That's down 20% from the previous week of 45. And with that being the case, that means that homes are selling quicker. So the demand is still there. Inventory is still fairly low in most places. We are going to talk about Cape Coral, which is an outlier right now, and one of the things I'm worried about, but we'll get to that story in a little bit. All right, moving on to Collier County trends. This is, again, as of yesterday. New listings here, same situation, down 3.6% to 461. Solds is up 32.5%. Again, that's a month to 45 days ago. That's what was going on. That's when interest rates came down. The pendings, what's going on right now. So now we're seeing with Naples, pendings down 269. That's down 12.1% week over week. And then same thing here. The surprising thing here is that Naples has been really an outlier in the market's trends because the prices have been increasing week over week for quite some time now and have been pretty steady. This week, however, we see the data starts to trend away and starts to break from that trend. Median price is actually down $660,000. It's down 1.5%. Not a whole lot. Again, could be a huge home or a lower home that skews these numbers a little bit. But here we see the median listing price is also down. So these two being down means that this could be the slowdown that we've already seen in the Lee County markets. So I think that's a pretty good indicator. So for those of you selling, just be aware. The prices have started to come down a little bit now in Naples, or at least over the last week, to 749,000. That's down 9.5%. Again, here, days on market. Now, this does show that there is still demand in Naples, and I think that's going to be the case for quite a long time. Just Naples is a really high demand area. Current inventory breakdown. Single family homes. This is both Lee and Collier counties combined. So single families, that's up 9.4% week over week, 9,465, 58% year over year. Again, like I said right in the beginning, the last 3 years have been, a completely different market. It was very, it's an unheard of, once in a lifetime event that occurred with the shutdown of the nation. So we had extremely low inventory levels, and now we're just starting to get back to averages and normals. Condos here, 16.6%. That is a noticeable increase in condos. The 16.6% week over week, 109% year over year. That brings it up to 57.78. Foreclosures, no real noticeable gains here. A few 46 foreclosures. That's up 3 week over week. And then interest rate is at 30-year fix is at 7.046%. It's up 4 basis points from the previous week. Average rent has still not changed in this area. All right, so real quick, I do want to just touch on the 10-year government bonds. That is the leading indicator as to where the mortgage rates are heading next. As you can see at the bottom, the white line, the wavy white line that is slowly increasing on an upward trend, that is really the 200-day trend of where rates are heading. As you can see, it is trending upwards, and even though we've dipped below the line 3 or 4 times, it is now above the line again, and that means interest rates are on the rise again. And because of what's happened with the Fed recently, with them coming out and CPI actually coming out hotter than expected, again, mainly due to housing actually, the Fed has also kind of taken a back seat to any interest rate declines or drops. But I think we're looking into the summer months, maybe moving into the fall months where we're going to see our first rate cut. Interest rates for the time being are going to probably stay where they're at pretty close, maybe move up a 0.5%, down 0.5%, but they're probably going to be fluctuating back and forth for quite a while. So those of you who are thinking of getting a mortgage, if you're planning to buy in the next 6 to 12 months, I wouldn't count on rates going down any further. I also, wouldn't say you need to go out and buy right now either, because they very well could go down quite a bit when they do start to cut rates. Now, the big story that I told you right in the beginning was Cape Coral, and that's what I want to touch on right now because it is the outlier in all of our counties right now when it comes to inventory, active inventory. So as you can see, all these lines, these are different cities. Orange right here is Cape Coral. The blue one up here is Naples. So you can see Naples has had quite a bit of active inventory. And then in 2020, it really declined quite a bit. The orange line right below though is Cape Coral. And as you can see, back in 2019, 2018, we were at close to 2,500 was our peak. Right now, we're up over that. That's the reason I said early on that this could be a buying opportunity coming up because we now have more active inventory in Cape Coral than we've seen since probably back in a housing crash of 2008. Just the simple law of supply and demand. The more supply there is, the less demand. That usually drives prices down. Cape Coral's prices have been coming down. I wouldn't say it's a fire sale like I've seen a lot of headlines, but it is something that's concerning and something for those who are waiting on the sidelines for rates to come down and prices to get more affordable. Prices are getting more affordable in that market, and we are looking for rates to come down towards the end of the year. So you have some time, I think, before you really, you really have some good opportunities. Just know that those could be coming in the future if the market doesn't heat back up again when rates come down. So just be on the lookout for that and start looking at the price drops. This article comes from NBC, and this is talking about the expected projection of population that's going to be moving into Cape Coral, and they're expecting over 100,000 people to move into the Cape Coral area over the next 25 years. And with those expectations, you can also expect prices to go up with that because, again, supply and demand. If there's more demand for a specific area, there's going to be less supply, and that's going to drive prices up. So if you're an investor, Cape Coral might not be a bad place to consider investing. However, again, this is a projection. This is not something that's guaranteed. So make sure you do your due diligence on that and understand, the risks involved. It's something that's going to be pushing against building, but something that is going to help overall in the, build out of an infrastructure of Cape Coral is going to be steep increases in impact fees. So if you're somebody who's considering buying a lot and building in Cape Coral, or if you've already bought a lot and consider building in the next couple of years, this could impact you quite a bit. It's not a crazy amount of money, but it's still a good chunk of change that you're going to have to know that might be coming. A new single-family home could pay as much as $8,748 for water, irrigation, and sewer in the next few years. The proposed increase could be 30% in some areas. These improvements are going to go into building out the infrastructure that's needed to support, central water, central sewer, those things that aren't really built up in the northeast and northwest parts of Cape Coral yet. They are underway, but as this article goes into describing, the amount that they've been charging for assessments is not going to be covering the amount of infrastructure that they need to build out to really cover the population that's moving into this area. With so much conflicting data and info out there, especially YouTubers who only show you data from the last 3 years, that's been completely skewed by a once-in-a-lifetime nationwide shutdown, it's more important than ever to base your buying and selling decisions in historically grounded data, not just the echo chamber, sound bites, and clickbait headlines meant to drive channel revenues. So if that's the kind of data you want, subscribe and hit that notification bell to stay up to date on the latest information, keeping you ahead of the Southwest Florida real estate market. If you have questions or just want to get my take on something, you can always call or text me directly at 239 310-5478. I'm always happy to hear from you guys, and I love to help however I can. Thanks for watching. I hope to see you in the next video, but until then, stay safe, stay positive, and more importantly, stay free.
Little boy, everybody told me you could be whatever you wanna be. So I told myself